Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst. I'm part of MarketSmith India team. Before we go ahead into this podcast, I'd like to state the disclaimer very clearly. Registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Let's look into Nifty's daily chart to understand how the market is placed at the current moment. And it is very important to understand Nifty's price volume action with respect to its key moving averages to gauge the market as well for the short term. As you all know, Nifty scaled a new high, that is, it traded above 20,000, which is a very crucial, which is a very historic step on the Indian markets front. After which, in the last week, if you see, it was a holiday truncated week because of Ganesh Chaturthi. On all the 4 trading sessions, Nifty closed in the red, which is a sign of bearishness coming into the markets. Firstly, you can say that it's more of a profit booking rather than selling pressure, because after making a high, most of the stocks, broader market indices have also made new highs. So stocks across the indices have also made a good amount of gains. So we can consider some kind of profit booking happening across the market. So that is the reason Nifty has come down, and the volume has also been below average in the 3 trading sessions. There was only one trading session where the volume was above average. And according to O'Neill's methodology, when the Nifty falls more than 0.2% or more on volume higher than the previous session, we consider that as a distribution day. So going by that definition, last week we had one distribution day adding to our tally, whereas 2 sessions have escaped the distribution majorly because of lower volumes. And on the moving averages front, both 21 DMA and 50 DMA are very close, and Nifty is also settled around that level in the Friday's session. So going forward, that is today and in this week as well, these levels are going to be a very crucial levels for the index, and we are expecting Nifty to bounce back from these levels as well. There might be some kind of selling if these levels are breached. So one should be very cautious when these levels are breached. And if there is any further addition of distribution days on the index front, we might change the market status to uptrend under pressure. And there is also, I think, a major doubt regarding why the distribution day count is at 5, and most of the participants are expecting the distribution day count to be 1. That is because we have changed the market status to rally, that is confirmed uptrend from under pressure, because Nifty scale a new high. The distribution day count is reset to 0 only when the market status goes through a full circle. That is from confirmed uptrend to under pressure to correction to rally attempt to rally. Only in such a scenario we reset the distribution day count to 0. Otherwise, we continue to monitor and continue to take forward the distribution day count. So that is one doubt we wanted to clarify on the distribution day front. So going forward, as mentioned, these levels are going to be very crucial. And if the Nifty finds support at these levels, it's going to be a positive sign for the investors. Whereas these levels are breached, further selling can be expected on the market. Next, if some of the companies which are in news and which will be under radar during the session are Star received an US FDA approval for capsules related to reducing risk of heart attacks and strokes. Positive step for the company. Bluestar is also in the news because the company raised 1,000 crores of rupees by qualified institutional placement. The shares were allotted at 770 rupees per share. That is a discount rate of 1.8% to the QIP floor price of 784. Delta Corp has received an GST demand from the officials nearing around 17,000 crores of rupees. Definitely not so positive sign for the company. State Bank has raised 10,000 crores of rupees by issuing infra bonds at a coupon rate of 7.49%. Related to PLI scheme, around 30,000 companies are expected to qualify for the scheme related to IT hardware manufacturing. In the cinema space, especially in the exhibitor space, both that is PVR Inox has seen or observed strong demand for the exhibitor space, and majorly because of films getting hit, films such as Jailer, Jawan, Gadar 2, which have been massive hits on the box office. So a positive sign for the company and all the companies in the exhibitor space as well. During September until today, FPI selling has increased to 10,000 crores of rupees in the Indian equities. This is majorly because US rates have been rising, and these investors are able to generate good amount of return in the US itself. So there is no major alpha or added advantage for these funds to invest in India. So some of the companies or some of the investors of funds have exited Indian market during this 1 month of frame. Last week on Friday overnight, US markets have closed in the negative territory, but the magnitude of decline is not so higher. Nasdaq closed mostly on the flat basis. S&P Dow Jones closed 0.2 to 0.3% lower. As we speak, Asian markets are trading mixed. Kospi and Shanghai trading in the negative territory, whereas Nikkei is trading 0.6% higher. GIFT Nifty is also indicating a muted opening for the Indian index. Around 19,700 level is the expected opening. So that is where the Nifty has closed on the Friday session as well. So not so major gap up or gap down is not expected in the today's trading session. And 50 DMA and 21 DMA are going to be crucial level for this week on the index front. For the chart of the day, we picked Star Cement. The company has looking very good on the both on the ratings wise as well as on the price volume action wise, on the chart wise as well. Some of the pointers are even though the EPS and RS are slightly on the not so strong zone, but they are fairly enough for addition. EPS has been down majorly because of March quarter declining in EPS. Apart from this, the company has reported a very good set of sales numbers, a positive sign. Price trend has slightly on the lower side. That is majorly because the stock has been forming a consolidation stage to base. So, and it is still a 10% to the pivot. By the time it comes to the pivot, another 10% from here, definitely RS line will improve and rating will also improve above 70. And a few other parameters which are looking good are during the base formation, the price volume action is very good. Most of the times the stock's volume, traded volume was on the lower side during base formation, which is a positive sign. And also this 50 DMA has been tested and the stock is trying to reclaim the 50 DMA, which is again a positive sign. Previously also this 50 DMA acted as a very good support for the stock. So this level is going to be crucial, and if it bounces back from this level, definitely it will come towards the pivot and if the market structure stays intact, or there is no addition of distribution risk, definitely a very good contender for addition to model portfolio. And the funds front as well, even though the magnitude of funds invested is on the lower side, but there is a consistent increase in the number of funds, which is what we look into. So overall, the stock is looking good. It can be a good stock to add to buy watch list as well. Thanks for joining today's pre-bill. Have